Hello, and welcome to another episode of Financial Goldmine. Today, we discuss one of the most essential tools for building financial security, savings account. Whether saving for an emergency fund, a big purchase, or just wanting to grow your money over time, understanding and choosing the proper savings account can make all the difference. In this video, I'll break down the different types of savings accounts, their pros and cons, and provide tips for making your money work for you. A savings account is a bank account that holds money. It is usually used to park money for short-term financial needs. Savings accounts typically earn interest and are a great way to save for a short-term goal, start an emergency fund, or earn interest on your money. A savings account is a great place to keep an emergency fund and money for unplanned expenses. It is also a good option for sinking funds, which is money set aside monthly for specific savings goals such as vacations, a phone, medical bills, car repairs, and possibly pet expenses. You can open a savings account at most financial institutions such as banks, credit unions, and online banks. Savings accounts are insured by the Federal Deposit Insurance Corporation, FDIC, or the National Credit Union Association, NCUA, up to the standard limit of $250,000 per person per bank. Interest is the price you pay for borrowing money and the return you earn on savings and investments. When you put money in a savings account, the bank uses it and lends it to customers, and you in turn are paid interest. The interest rate that you receive for your savings will vary. Now let's discuss some of the different types of savings accounts. There are many different savings accounts, such as traditional savings, money market, certificate of deposit or CD, and high yield savings. A traditional savings account is straightforward and easy to use. You make deposits into your savings and earn interest. You can usually withdraw at any time, and most savings accounts can be linked to your checking account, although that is not required. The downside of a traditional savings account is that the interest rate is usually low. A money market account is a type of savings account that pays higher interest. It also has certain checking account features such as check writing and debit card options that allow you to make deposits, withdrawals, and transfers. They usually require a minimum balance to receive the highest interest rate offered, and there is typically a limit on the number of times you can access your money within a month. A certificate of deposit is a type of savings account with a fixed interest rate for a fixed amount of time. Withdrawing money before the term ends usually incurs a penalty. A high-yield savings account has a higher interest rate or annual percentage yield than a traditional savings account. The annual percentage yield is important because it tells you how much interest your money will earn in a year. Other types of savings accounts that we won't get into in this video, but I wanted to list them so that you're aware. We have student accounts, family savings accounts, salary account, and a health savings account. We will definitely dive into health savings accounts in another video. Let's talk about the pros to savings accounts. Savings accounts have many pros. First, many can be opened with little or no initial deposit. Your savings account is federally insured and guaranteed up to $250,000 per account type and account holder. One of the major pros to having a savings account is the interest that it earns, which helps your money grow. Some earn more interest than others, so choosing the right type of savings account to meet your needs is essential. You can easily access the funds in a savings account by making a withdrawal at the bank or ATM, or making a transfer internally or externally. With most savings accounts, you can withdraw money without penalty. Of course, there is a penalty with a CD if you withdraw your money before the maturity date. In April of 2020, the Federal Reserve removed the requirement to limit certain types of withdrawals to no more than 6 per month. Although this is no longer a requirement, some banks have kept the limits in place. It is essential to research the bank and type of account to determine if these limits are in place at the institution that you choose. Although a savings account is a very positive financial tool, drawbacks depends on which bank and type of account you choose. So let's talk about some of the cons. Savings accounts offer lower interest rates than other investment options such as stocks, bonds, mutual funds, ETFs, and index funds. Trust me, if you stick with me, we are going to talk a lot about all of the above. Investing will be a major part of this channel. We will get there. Just stick with your girl. Another con is the fees. Some savings accounts charge monthly fees, such as a monthly service fee, minimum balance, returned items, inactivity, and overdraft fees. We will review the top savings accounts in a different video, but to avoid fees, reviewing the terms and conditions before applying for a savings account is important. How do you choose the right savings account? The first thing that you want to decide is if you want an online savings account or if going to a physical branch is important to you. Online banks usually offer higher interest rates because they do not have the high overhead that a brick and mortar bank has. Next, you want to look at the interest rates. In order to save more money, the interest rates are important. You should also consider all of the pros and cons discussed in this video. How much is the initial deposit? Is there a minimum balance requirement? What type of fees and penalties are associated with the account? Weighing the pros and cons of each account will help you make the right decision. I am doing a separate video on the top high yield savings accounts, but some of my favorites are Capital One and Ally. It is also okay to have more than one savings account or savings accounts with different banks. You never want to keep all of your eggs in one basket. A pro tip for setting yourself up for success regarding your savings goal is to automate your savings. Whether it is a direct deposit or a transfer from your checking account, automating the process will make savings and reaching your goals a lot easier. Once your savings are healthy, it is time to start investing, and we will get into this in another video, several videos. Trust me, they are coming. But whether you're just getting started or looking for ways to maximize your savings, having the proper account can help you reach your financial goals faster. Remember to compare interest rates, fees, and features to find the best account for you. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell to never miss out on more financial education. Are there topics that you would like to see on this channel, or do you have any questions? Drop them in the comments below and I'll gladly help. Thank you for watching, and I'll see you in the next one.